To assess how fast the world economy is rebounding and to analyze what it will mean for the United States, we are joined once again tonight by one of our regulars, Roben Farzad, a senior writer with BusinessWeek. Always good to see you.
Thank you, Martin.
But especially today because we have positive news. And let's start with Germany. How significant is the second quarter growth in Germany? After all, it is the largest economy in Europe. And what does it mean for our own economy?
Oh, it's pleasant. We'll take whatever good news we can get, but more power to them. This doesn't mean all that much to the rest of the global economy.
What contributed, do we think, to Germany's positive numbers this time?
Well, Germany has similarly espoused fiscal stimulus, a cash for clunkers program over there. It has a more robust exporting system. It didn't binge on subprime securities like some of the other Western economies and especially the emerging European economies did. So it didn't have such a hard fall because it didn't soar as high.
Okay, and France also had positive news. What is the explanation there?
Similarly, France was somewhat buffered from all of the subprime contagion thing. As recently as 2 or 3 years ago, France was an economic punchline. It was looked at as a sclerotic economy. The labor force is not very mobile. It's very hard to hire and fire people. That cuts both ways. When you try to insulate yourself amid a global contagion, the likes of which we've seen in the past 2 years, you're bound to do marginally better than the other economies.
Okay. But yet, despite that, there are many European economies that are not seeing any real signs of hope. I mean, let's talk about Great Britain. Their unemployment rate is up. Spain is now approaching nearly 18%. How do those facts fit in with the news of today?
Well, it shows you that you're not talking about a single entity in the European zone of economies. Spain, for example, was precisely one of those economies that binged on subprime, that espoused new paradigm thinking, that built condos as far as the eye could see, that opened its borders to immigrant labor to come in to mix cement, and now it's actually having to pay people to go away, and it's dealing with a significant hangover. Ditto Ireland, ditto some of the economies that were exposed to Central and Eastern Europe, namely Romania, Austria. So it shows you that the European nations, even the ones that share a common currency, don't share their common economic health.
Do you think that Germany and France, the numbers today, are an anomaly or part of a trend?
I hope it's part of a trend that we finally abated the deep losses that we saw past.
Okay, but I also want to bring in Asia, because should we be focused on these numbers coming out of Europe or looking more at numbers coming out of Asia?
Yeah, the hope rests on Asia because you're not talking about 0.3% economic growth in countries like China and Singapore and Malaysia and India, Indonesia. It's significantly higher than that. And the countries are throwing significant amounts of fiscal stimulus at the problem.
What numbers are we looking at there?
Oh, you talk about China, it's still approaching 7 or 8% economic growth annually.
Today?
Yes. And there's significant spending on infrastructure, on high-speed trains, trying to keep the engine going with the surplus of dollars they've accumulated. The question is, will these countries in the Chinese ecosystem turn around and then buy American goods and English goods and keep that system afloat?
We have to leave it there, Roben Farzad, leaving us on a bright note. Thank you.
Thank you, Martin. Thank you very much.